What's up, man? Hey, let me tell y'all this. Consistency at anything is how you get good at everything. Feel me? So with this YouTube, that's what I'm being. Consistent. The gym, consistent. Investing, consistent. Everything consistent, man. I got a lot of things I gotta get better at, and I'm just staying consistent at a lot of things. But hey, man, the first thing first, what we're gonna go over on this video is reason why stop loss is important. What even is a stop loss? A stop loss is basic. A stop loss will protect your profit. It's gonna strengthen your risk management. It's gonna help you remove your emotions, and it's gonna teach you to be patient. Okay, a stop loss is a price point or a percentage that stops you out of a position or an investment that you made. So, I'm gonna go over some examples for y'all as well, but first let me finish this. You can never get unlimited wins in a row, which is true. Unless you're holding long term. Like if you look at this and you holding it long term, then of course you're gonna win long term because the market been going up for the past since the market been open, you feel me? So if you're a long-term investor is different than being a swing trader or a midterm holding stuff for a couple months. I dabble in both, man. Your stop loss could be fundamentally if you're holding long term or technically if you swing trade. So let's go over some technical and some fundamental, you know, what did I just say? Stop losses. Yeah, I'm tripping. All right, so first thing first, a technical stop loss would be something like this. This is a great example. Okay, so you see how SPY broke out this bottom trend line, this rising wedge, right? All right, what you want to look at is, say you're going long in SPY. See, once it break below 585, you see this gap fill is automatically coming back down to 577. Or not automatically, it's like an 80% chance. Like look up gap fill and look how it's over 80%. Look how um um promising gap fills are. But if you are looking at this area right here, this is the last known support and resistance. And this the last known resistance before the gap up. So high chance is gonna fall back down to this line. So if you see it past 585, you already know, oh shit, SPY should technically drop another $7.54. Like you could really, pull out from there, re-enter, pull out, reanalyze your position, or you can hold long. And if you hold in long term, you just add on a dip. You just average down. That's what I do for my long term portfolio. I just average down. Like when shit come down, perfect. Average down. Um, but if you're not holding long, if you swing trading and shit come down, perfect. Stop loss. So this would be a technical stop loss. Um, I know, well, we can say SMCI, they got a lot of fundamental things going on with their attorneys, with their books, with their finances. They got a lot of, I'm talking about a lot of BS going on with their finances. So every time when you see some fundamental news come out about how they are not being proficient with their 10Ks or their accountants tripping or just their finance fundamentals are tripping, like look at this stock, it's been tanking. Boom, you could have sold out of them just based off of that. When a company gets a new CEO, you can basically a new CEO could change the whole dynamics and fundamentals of the company. So depending on who gets a CEO or if a CEO leaves, that could get you out of a certain position. Like with Chipotle when their CEO left. Yeah, when they CEO left to Starbucks. You see when Starbucks look when they CEO went to Starbucks, look what happened. It gapped up. Look what could potentially be happening. That gap fill, I'm telling y'all that gap fill is something serious. Okay, so look, it's the first gap where it could have bounced right there. Not right there. And then right here is another good area, or it might just come all the way back to the bottom. So yeah, this is, I guess, fundamentals. I should show y'all more fundamentals, but fundamentals or like say a company is unprofitable now, they get a new CEO or anybody in the top position change, or say the whole company, like their whole inventory getting rebranded. Like That's some fundamental things that should make you look at the company you invest in long term and be like, yeah, if they switching up the company plan and how they gonna grow in the future, if they switching up the whole plan, then I need to switch up my plan. And you the CEO of your own portfolio, so yeah, you got to make those decisions. Protect profits. Protecting your profits by using a trailing stop loss or once you're up on a position. Don't let your profits fall below a certain percentage without shaving some profits. So let's go over Playboy. Playboy, my average field is right here. I was about to guess, that's why I looked up, but I remembered last night I had went through all my shit and I was like, this the last all be all if we get stopped out of a position. If the market keep pulling back. But yeah, safer Playboy. I sold some Playboy up here. I ain't gonna lie. I had shaved some profits because it was first my first entry was around like 59 cents. So my average cost was way lower, but when I sold some profits, it came down. But basically, I sold some profits up here because I knew it was gonna pull back. Like the market goes in cycles. The market's gonna run, it's gonna chill, and then it's gonna run again, or it's gonna run, chill, pull back, run again. That's what we see happening right now in US 30. Run, pull back. That's what it's gonna do, right? It's gonna take the elevator down and the stairs up, but every time it take the stairs up, it's gonna always pass what the elevator did. So y'all gotta remember that too. Stairs up, elevator down, stairs up, elevator down, stairs up. It's gonna always pass because that's what the market do. That's what the U.S. economy is great for, right? We all know the U.S. economy is great. Let's benefit from the U.S. economy together. Um, Last thing, yeah, I just want to protect your profits. Yeah, I sold some profits of Playboy because I knew it was gonna pull back. Like the market goes in those kind of cycles. And sometimes when things pull back while you in it, sometimes you just have to be patient to hold it and for it to keep going up. So yeah, I protected my profits, man, because yeah, I could have still had all my shares. They would have been worth 165, but I sold them up at 180 something. So yeah, that's a 20% profit every share just for getting out of it early. And then I put some of that money into this play right here, and I had to manage my stop loss with this play too. Yeah. Let's see what's next. Risk management. Everything in life is risky. With investing in every risk in life, you always want to calculate your win to reward ratio. So like, yes, perfect. What? Let me take this off. This tool right here. Let's see. This tool right here, the projection long position is gonna all it well. This gonna this gonna be your number one tool for helping you calculate what kind of risk you're taking. So it's like, okay, so where did I buy this stock at? That's where you want to put it at, wherever you bought the stock at. You can hit your settings, entry price 1403, and then it's like, okay, how much do I want to risk? Do I want to risk 10% of my trade, 20%, or do I want to risk or do I just want to wait for it to break below the next support level? So it's like you calculate how you want your own risk. I forgot how what I had mine on, but I feel like it was around 10% or maybe 15. Who knows? I mean, I'm gonna re-see it when I edit this video. Okay, so yeah, we got risk management. Everything in life is risky, bro. From riding a bike to driving a car to working a job to not investing to investing to going to the casino to going on a date or meeting a stranger for the first time. It's like everything in life is risky. So, um, yeah, you just have to calculate your risk every time. Like every time you go outside for your day, some people might think about dying every second of their day so they can calculate what they need to do different. But the same concept applies with the market. Like you could lose some shit in a second. So it's like every move you take got to be a calculated risk. Like when you know you can lose some shit, you really got to move calculated. So that's what that risk management shit about. And when you moving smart, you gotta move calculated, bro. You can't be moving like you ain't got shit to lose. All right, patience. Patience is key because no one has a magic ball that tells them when the stock will do this at a certain time frame. No one knows you gotta have patience when your investments are red. So shit, say for Fro, I got filled in Fro right here, 1403. Fro not taking off yet. And all I'm doing is this word right here. I'm just staying patient, man. That's really the only thing you can do because you don't have no magic crystal ball and you know when some shit gonna take off. Once you did your analysis and once you got your stop loss in place, you just playing the patience game. And once you get some skin in the game, you'll learn how to just become more patient. If you need more help being patient, but just meditate and just find something within yourself that you like about yourself that you can meditate on and just not overthink. Don't overthink about this shit. Yeah, don't overthink about none of this shit. Shit really easy. Let's see what we got next. This my portfolio though. Let's go next. What we got next? I gotta be patient for this play. What we got next? Yeah. Remove emotions. Sometimes it's hard to sell a stock while it's going down in a moment, but if you have a plan or automatic stop loss in play, then focus on investing logically. Um, Through a lot of these brokerages, depending on what broker you use, you can set a trailing stop order, or you can just set a stop limit order. And what those two things gonna do, the trailing stop order and stop limit order, what it's gonna help you do, or what it's gonna do is if you put if you put if price falls below 41.30 at your as your stop limit, soon as the market or soon as the stock price goes past that 41.30, your brokerage gonna automatically sell you out. So it's like you ain't gotta do nothing, you ain't gotta touch nothing. So that's how you remove your emotions from trading. And if you don't want to set it to where they sell it at a certain level, 41.30, then you can set a trailing stop order. A trailing stop order is gonna work like a moving EMA, but it's gonna be a percentage. So like, let me show y'all real quick. So basically, say you want to sell us, say this. All right, so we're not using price levels anymore, right? So say this stock turns around and it start going up, and I put if it fall back down by more than 2%, get me out of it, cause that means I'm up, right? So once the stock recover, we know it's gonna run, then it's gonna. I should do a video on the market cycles next, but eventually it's gonna pull back. Everything fucking pulls back, bro, no matter what. So yeah, once it start to pull back, if it pull back over 2%, it'll automatically get you out. So it's like, okay, you was able to be green. It didn't run all the way up to your take profit, but you still green, you feel me? But yeah, man, those are the top things you need to analyze when you're investing, bro. And what you need to calculate, man. Make sure you calculate your risk right. Already have your plan before you enter. Understand your levels, understand what percentage or stop loss you want to you know, follow, and always I need to remove them. And always just remember that, man. Control your emotions, bro. The more disciplined you stay, the better your account will be. Like, really can't preach too much about that because that's just how reality is, man. The calmer you stay, the better you can think. Make a smart move because that's what we're doing. We're making smart decisions, man. So just make sure you play your role in a smart way. And that's all I got today. Hey man, y'all make sure y'all stay locked in.